friends. This is the last series of sessions in our conference, B20 Turkey Conference. Our title is Scaling Up Inclusive Business, Engaging Governments and Business in Inclusive Value Chains. Now I would like to invite to listen, to have opening remarks of Mustafa Osman Turan, and then I will invite Mr. Marcos Neto, and our moderator will be Eray Akta today. And then I will invite 5 panelists. They are Eriko Ishikawa, Rick Johnston, Justin Mandi, Gary Littman, and Yılmaz Aygüden. But first of all, let's listen opening remarks of Mr. Mustafa Osman Turan, Head of Government of G20 Engagement Ministry of Foreign Affairs.
Good afternoon. Distinguished participants, ladies and gentlemen, I'm delighted to be here today to report to you on the progress the Turkish G20 presidency has achieved in developing a G20 inclusive business framework. I would like to thank from the very beginning our partners from Business 20, as well as UNDP and World Bank Group, who have been working together with us in this area over the past year. Let me begin by saying a few words on how inclusive business fits into Turkey's G20 presidency priorities. Inclusive business theme is very closely connected to our inclusiveness priority. Domestically, we've been examining our policies and business practices to ensure that they promote inclusive growth. Internationally, we've been trying to ensure that our decisions and actions will benefit not only the G20 countries, but also the entire world economy. We have put a special emphasis on reaching out to low-income developing countries. Turkey's inclusiveness agenda is all the more important in this critical year for development. As you probably know, we have had a successful conference in Addis Ababa for financing for development in July, and the upcoming UN summit to agree the Sustainable Development Goals in New York set a new course for global development efforts. The private sector's role is integral to delivering on this new level of ambition. Private sector, capital, and knowledge need to flow to developing countries to deliver development finance and advance the Sustainable Development Goals. G20's new inclusive business framework, once agreed in the Development Working Group and then adopted by the leaders in November, will aim to support this effort. It focuses on enabling policies and business practices that will grow inclusive business. Let me outline some of the key elements. First, the framework sets out what we mean by inclusive business and where the G20 adds value. It is a relatively new concept, and part of our rationale is to promote how it supports the private sector's role in development. Inclusive business maximizes the positive impact of the private sector on low-income people, groups, and countries. It connects poor people and communities to markets, either as buyers or suppliers. It enables affordable products and services to be developed to meet basic needs and creates opportunities. And at the same time, it can enhance access to key development enablers such as energy. G20 framework adds value in two main ways. It can enable inclusive business through national policies and approaches, and it can help grow inclusive business through its convening and mobilizing power. In doing so, the G20 needs to build on existing initiatives, which are many, instruments, policies, and networks. The G20 framework also needs to highlight how inclusive business can contribute to the proposed Sustainable Development Goals by focusing on specific case studies and sectors. Inclusive business delivers the most impact in certain sectors. Agriculture, energy, and water are all cases in point. In India, for example, a company developed a certificate program for smallholder farmers to ensure they are able to deliver quality vegetables without significantly increasing costs. The example of the development of a new affordable solar lanterns which can provide light over long time periods should have a big impact on poor people's lives in Africa in particular. In the Philippines, the government has granted a concession for water and wastewater services under the condition that it meets service targets for slum populations. There are a number of excellent inclusive business examples throughout the world. Including those excellent examples are the ones who win the G20 challenge on inclusive business innovation. We should celebrate these successes and ask ourselves what made them successful and how we can sustain their results. By doing so, our framework can help develop the evidence base and support the implementation of specific sustainable development goals. The G20 framework recognizes the role of governments in enabling inclusive business. It identifies supportive policies to create the enabling environment, promote awareness, and empower individuals, groups, and companies to take up inclusive business models. Again, there are a number of good policy case studies and best practices to draw on. The framework should build on these and point to specific government policies. These enablers might include addressing information challenges like market data, strengthening rules and regulation to enable market activity, facilitating increased financing, and improving capacity and infrastructure through training and projects. It would be great to hear the business perspective on all of these enablers. Finally, our G20 framework needs active private sector participation. I'm here today to deliver a clear message to all of you. Inclusive business is good for business, is a good business. Businesses can reach an estimated 4.5 billion new customers with a combined spending power of $5 trillion per year. The world's companies, both large and small, will create and sustain the jobs and investment that we need for inclusive growth. Small and medium-sized enterprises are important for inclusive business. In many countries, they generate up to 80% employment. In terms of the wider perspective, inclusive business can contribute to other G20 objectives as well. For example, beyond inclusive growth and employment, it can mobilize investment and create opportunities to expand trade. When it happens in rural areas, through the engagement of smallholder farmers, it can advance food security. When taken by the young people and women, it will advance gender equality and youth employment. All of these require a strong G20 partnership with the Business 20 and other engagement groups. The B20 has a key role to play in conveying the private sector's ideas and input, as well as your concerns and challenges. Our framework can help identify and promote areas that will help you, the B20, the wider business community, grow inclusive businesses. This might, for example, include harnessing your investment and innovation capacities, implementing corporate strategies to target poor people and communities, specific market building and training activities, and new financial services. I would be very grateful to hear your views on these elements and the overall inclusive business framework. Ultimately, we want to use the framework to deliver a clear leaders-level call on inclusive business. This should help promote the initiative at the highest level for CEOs as well as leaders. I look forward to hearing your views on how we can go about delivering the framework and getting the message on inclusive business out there. Thank you.
Good afternoon, ladies and gentlemen, distinguished guests. I think the first thing I would like to do is to recognize the leadership of the Turkish presidency by putting the issue of inclusive business in the G20 agenda this year. It's only that vision that Turkish presidency brought to the table that has allowed us at UNDP and our colleagues of the World Bank Group and the IFC to work on the construction of this framework. We have believed for many years at UNDP that inclusive business is a strong approach, a strong type of business that maximizes the interface between business and development. I think we've come to a moment in history with the Sustainable Development Goals that the role of the private sector and the role of business in development will need to build upon but goes beyond corporate social responsibility. We're only going to be able to maximize business, full impact in development, if it is done from the core operations and the core aspects of any business. And that's what we're trying to demonstrate it by the G20 Inclusive Business Framework. Mustafa Bey has described to you the framework. My colleague and dear friend Eriko, which has worked with us intensively on this framework, will sit in the panel and we will be able to answer you and to provide you with much more details. So my role will be to look forward. How, as Mustafa Bey said, we are going to implement, which is one of the eyes of the Turkish presidency, the G20 Inclusive Business Framework. One of the things that we're hoping to happen at the Leaders' Call in November is the launch of the G20 Global Policy Platform on Inclusive Business. The idea is to create a space and a platform aimed at policymakers, as well as to interface between policymakers and business to put in place the necessary enabling environment for inclusive business to scale up. We've known, and Erica will show you in her examples, that inclusive business is 1, profitable, 2, lift people out of poverty, and 3, is environmentally sound. So we really need to scale this up if we are going to see progress on the Sustainable Development Goals. The platform will be a space, a multi-stakeholder space, in which we want to, 1, expand the evidence base, demonstrate, furthermore, the business models that are able to be profitable, social, and environmentally sound, as well as demonstrate the policies, specifically policies in inclusive business, that governments, G20 members and non-G20 members, can adopt to foster and scale up inclusive business. The platform will also be a space to support the training and the peer-to-peer learning among policy makers of G20 and non-G20 members. The platform will position inclusive business within the G20 for years to come, we hope, as well as in the relationship of the processes that will be coming in place to implement the Sustainable Development Goals. And finally, the platform will be a mechanism to improve coordination among policymakers, but also between policymakers and the business community. In that sense, the B20 is incredibly important. It is essential that in policy formulation, as we've heard today several times and yesterday, that the business community is sit on the same table, being part of making policy formulations. And the platform will try to generate that over the next 12 to 18 and 2 years' time. So my last point is, I will add to Mustafa Bey's call that the B20 and all of you engage with us as we take forward during the Chinese presidency of the G20, the development of this platform. So it can be a platform that serves your interests, your needs, that helps you be at the table with governments so we can formulate the appropriate set of policies and business models to scale up inclusive business. Therefore, bringing business directly to the Sustainable Development Goals implementation that starts in January next year. Thank you very much, and I wish you all a good panel.
Thank you for the remarks. First, I would like to thank Mr. Mustafa Osman Turan from Ministry of Foreign Affairs, and then Mr. Marcos Neto, Team Manager, Private Sector and Foundations Team, Bureau for Policy and Program Support, UNDP, United Nations Organization. And now I think we can start our panel, and I would like to invite Mr. Eray Akta from TÜSİAD. You are here, thank you. And our panelists, please. Eriko Ishikawa, Global Head Inclusive Business International Finance Corporation, IFC. Mr. Rick Johnston, Managing Director, Global Government Affairs, Citi. Mr. Justin Mundy, Director, the Prince of Wales International Sustainability Unit. Gary Liedman, Mr. Gary Liedman, Vice President of U.S. Chamber of Commerce. And Mr. Yılmaz Arguden, Chairman, Arge Consulting Member, B20 Knowledge Partner for Governance and Sustainability. The floor is yours, Mr. Eray Akta. Is everything all right?
Thank you very much. I'm not sure about the microphones, though. Anybody can hear us?
I think we need a microphone. You don't have a microphone here? We need a microphone, please. And other panelists, do you have microphones and earphones? Do you have a microphones? Diğer misafirleri de bir kontrol edelim lütfen. Olmazsa el mikrofonu verebiliriz eğer çalışmıyorsa. And other guests, do you have microphones and they work? Do they work?
Can you hear me?
No, I don't think so. Can you please adjust the Sound? Voice? Can you try again, please?
Can you hear me now? No, not yet. Maybe. Is it open?
Otherwise, we can give a microphone, handy microphone. But we have to be quick, please.
Another, right.
Otherwise, I will give my
All right,
microphone. I will move my microphone to you.
Thank you very much.
Does it work now?
I guess it's working, right? Can you hear me from the back? No?
Your microphone. May I try? Can we try with this microphone? Would you like to try with this one?
This one would be the best way to go, I guess, so you can hear all. Esteemed guests, I would like to welcome you all back to Ankara and to our panel. I guess this might be one of the most important panels if you look into the last couple days especially, because starting from the inaugural speech yesterday morning, we have been always working on an issue. That's the current and future situation of humanitarian atmosphere. And we can all understand that it's an important responsibility of the business world, most likely hand in hand with the governments, so that we can create a more inclusive, more qualified growth. Otherwise, we won't be able to successfully tackling the biggest problems. Okay, obviously there is no magical wand, or there's no any magical wand that we can elevate poverty in a second. We need baby steps. We need different approaches, and in combination, most likely, we can create a much better world. So today we have one of the strongest colleges of panelists, I would say. If I were to quote their resumes, it will take an hour or so at the least, I guess. So I'll be skipping that part, but I'm sure that they'll be contributing a lot. I won't be keeping the opening remarks too much, but I want to quote Madame Lagarde today. If you were there, it's been a very interesting moment, I guess, because she was quoting someone else, very important leader, but he was saying, we spiritual leaders can take care of all the hopes, or take care of hopes, as long as you business leaders can take care of jobs. So taking care of jobs in combination with the governments would be the most important case, I guess, but we'll see how we can achieve that. So, Mrs. Eriko Ishikawa, I'd like to start with you and direct my first question with you. So you've been personally involved in the drafting of the G20 framework for inclusive business. We'll be very happy to hear about it, and how did it came about, and what do you think the impact will be after publishing such an important document or a report? Could you please get into that?
Thank you so much for asking me the question, and thank you all for staying here. I realize this is the last session on the last day, so we all thank you that you're here. I was very, very happy to hear Mustafa Bey describe what the framework is, and my colleague Marcos, who also has been working very hard on it. But we were asked by the Turkish presidency of the G20 to come up with a framework on inclusive business. And one of the reasons the World Bank Group was asked is because the International Finance Corporation, where I work and is part of the World Bank Group, is the private sector lending arm. And we have lent to over 400 companies that use an inclusive business model in over 90 countries, all developing countries. And we feel that this is one way to approach what is necessary to do by business to impact, low-income people. And it's really us customers, suppliers, and it's in the value chain. So it's core business. And the most important thing is that we were able to run a G20 challenge in 2012 on inclusive business innovation. And we had 15 companies who actually met all the requirements that we had set up. In addition, when Mustafa Bey talked about the $5 trillion market, which is for the low-income population in developing countries, we did a global consumption database using household survey together with the World Bank to really pinpoint what are the areas where poor people spend most of their money? And it turns out it's just like anybody else. It's food, it's housing, it's all the necessities, and they spend money. People forget because maybe the amounts are small, but on the aggregate, there are 4 billion people. So it's a huge market and it's a huge opportunity. So I really wanted to just say it has been very, very important for all of us to be able to have a workshop on inclusive business here in Ankara in April, which Mustafa Bey actually organized, and it was fantastic to be able to have business come, and some of our clients came to speak, and to have policymakers from different governments of the G20 listen, and they were all very enlightened. I think people forget that business can actually impact the poor in a positive way and making money.
So maybe we can also have another microphone, but so you're saying it's not a demand problem, it's another kind of supply problem, and if we can tackle it right, we can make a huge difference. And before moving on, I'd like to add something else, by the way. What's the dollar amount, for instance, or what kind of money are we talking about? Because IFC is the biggest multilateral investor in this regard, I guess. And how does it help the companies in that regard? If you can just talk about it.
Sure, I'd be happy to. Yes, we have been doing inclusive business. That's really part of what we do. So I went back all the way to 2005, and we have invested $12.5 billion all over, developing countries. And that is probably the largest amount in terms of multilateral. So this is big ticket. This is not small business. And we also did for the G20, check into other multilaterals. The next best multilateral is the Inter-American Development Bank, and they have done about a little less than $4 billion since 2005, and the Asia Development Bank has started just 2 years ago, and they're around $340 million. So I think this is something that many other, development finance institutions are probably doing it, but they haven't categorized it. And if I may just say, we issued an inclusive business bond recently in the market in Japan. It was $200 million worth of IFC AAA bonds, which means that there are investors who are very interested in having a high rating of a AAA, but knowing that the money is going to some type of social project. So it is not just the business of doing this, but it's also that investors are interested.
Perfect. Perfect for his comments. Thank you very much. I'll just check it again. Maybe this time it's working. Thank you, you can. And thank you very much for your comments. And I would like to continue with Mr. Rick Johnston. And I want to give you a combination of questions altogether so that you can relate to that, because you have a really interesting project that's going on. It's called City Inclusive Finance. So you have a special team working on this agenda, a very highly regarded team. Maybe you can also, first of all, explain us what is this initiative is about, and then if you can link this to an answer to how governments can help business improve the sustainable or also inclusive business around the world. What kind of models can be developed, and how can they work in or pitch in?
There we go. Thank you. Well, City, number one, we're very delighted to have been invited to participate in this panel because it's a topic that has grown to be in importance within our company. It's always been important in a financial educational context, as you recall, former city banker. We've been developing this program now that's more based on the SIBA model, Sustainable Inclusive Business Activities. But I should point out to you that one of the reasons why Citi, I think, is engaged in this as extensively as it is because we are operating in over 100 countries. We have a presence in over 100 countries in the world, and therefore we are really on the ground and experiencing the demand of the micro, small, and medium-sized enterprises. We've had a long history in micro enterprise finance, but I think one of the key phrases that appears in the program here is scalable. And in my mind, that's really a key factor in determining how these programs have to be developed in order to have them remain sustainable. And that is, you've got to reach scale. For companies like ours or virtually anybody else's of a larger size who's going to try to incorporate a SEBA model into their own business model, as well as trying to help promote that with other smaller companies. So let me say that we've really tried hard for, I'd say, about 20 years now to be a thought leader and making a concerted effort to help with financial education and financial inclusion. It's something that's sort of in our DNA, frankly. The City Foundation is our arm by which we make grants and make contributions in that regard, primarily for financial education. Of course, the City Foundation gets approached on a lot of different topics, but what we've been trying very aggressively to do is to limit where we put our City Foundation funds into financial education and financial inclusion. It makes a lot of people unhappy, but we think that ultimately this leads to better business for us by reaching out and doing what we know best, which is financial education. Last year, we started organizing this mission on the SEBA model, and we've dedicated a lot of resources, but it's really now oriented towards not just the micro, but the small and medium-sized enterprises as well. As you can imagine, there's a bit of a challenge for us because following the financial crisis and following the regulatory requirements imposed by Basel III, for us to extend credit in the context of how we were looking at creditworthy businesses before the financial crisis versus now when we have to carry a lot of this on our balance sheet, for us to extend credit is a very comprehensive and robust review. So again, by our dealing with like microfinance enterprises who then will reach out as institutions and really go to the micro entrepreneur, that gives us ability to network, but also gives us the scale necessary to justify our engagement in that kind of financing. If we tried, for example, a city to set up shop to support microfinance loans of, let's say, $100 a week, that would just not be the scale that would justify the business approach. So we deal with the institutions that then deal with the network. There are a couple of examples I want to cite because this is a real-world activity on our part. Those of you who are interested, and you must be because you're here, we have a Responsible Finance Forum. It's actually the 6th one we're hosting. It will be held in Antalya, and it is part of this G20 effort on September 7th through 9th. The theme is going to be evidence and innovation for scaling inclusive digital finance. And as you can imagine, I'm sure you've all run into this, digital is the key word now for extending services, and particularly financial services, to small and medium-sized enterprises, maybe not so much microfinance. We also have the foundation. It's funded a study, again, something you might want to refer to. It's called Growth for Good or Good for Growth. I didn't do the title. And it was drafted by Tufts University, Fletcher School of Law and Diplomacy, and Deloitte. And it again deals with this question of SEBA and the motivations for it, the challenges behind it, and how, and this is a key problem in SEBA, is how do you measure the benefit of a SEBA model in the context of corporate performance. So this is something that I think, talking about challenges for extending finance and extending the SEBA model, it's the measurement of the benefit to the corporate performance that still is somewhat challenging. We've always done financial inclusion, and I just wrap up in terms of what Citi's doing by citing the fact that we now have a Better Than Cash coalition that we have formed, along with the USAID and the World Food Program. And we have 16 member governments signed up for it, in which we're trying to emphasize the use of electronic payment systems rather than cash in banking. And it's it's proving quite successful. There are a number of very important member states involved: Colombia, Philippines, Peru, Kenya, as examples. Let me switch very quickly, because I think the most important topic to cover on this is what can governments do to help move this SEBA concept forward. Certainly, we all know a government concession helps. It helps prime the pump. But then if you throw the sustainable modifier into that, you've got to be very careful about a one-off kind of business proposition, particularly for small and medium-sized enterprises. Also, there are government policies that could require local content of certain inputs into a given project. Once again, yeah, useful to prime the pump, but again, that is not a sustainable business model if the government is going to subsidize that input on a regular basis. That's not real. So concessions, yes. I guess I'd say governments need to just be very careful about how they go about catalyzing projects for small and medium-sized business, and being it's contrary to government thinking, but once they get into something, have a sunset to getting out, and making those companies start to realize that they have to fend for themselves. They've got to be competitive on their own. Several other factors I'll cite very quickly by which governments can help develop the SEBA model. Reduce the costly and excessive regulatory burden. The regulatory burden that has been developed over the last 10 years for financial services is just overpowering. And it's overpowering for us as a city. The costs are in the billions of dollars. You can imagine a small or medium-sized enterprise having to contend with this. So it's an impossibility. Governments have to be more sophisticated at looking at the impact of the regulations that they're crafting, and consider the specific needs of small and medium-sized enterprise. Establish and support the formation of full-file credit rating agencies. That is critical throughout the emerging world, and it's been a need and will continue to be a need. Standardized project documents. Establish collateral registers. What else we have here? Allow movables to be pledged as collateral. And certainly, last but not least, is improve the rule of law and the legal regime in the markets where the SMEs operate. Because if you don't have a predictable form of recourse, if you don't have an established and predictable judicial system, and you have to contend with corruption, the companies like ours that are going to deal with trying to download this kind of business activity just won't go there. It's too much.
If I can hear myself, thank you very much. Really interesting points, and I would like to wrap up a couple of them, because starting from the last, the importance of the rule of law and transparency and predictability of not only business models and the companies and the laws, but also most likely having a fast and fair judicial system, so that you can, if there's a trouble, it'll be resolved. But I understand that governments' movements should be very careful, so that if they misstep some consultations with the private sector, for instance, then even with good intentions, they can disrupt the current system, and the unsustainable models will not only not help the system, but also even harm the structure as well.
One last thing is infrastructure. Because, and we've all talked a lot about it, but when you consider, particularly in a value chain context, a large corporation like Boeing or anybody else, people producing computers, if they go to a small and medium-sized enterprise to supply some componentry, they're going there for two reasons. One, it's cost beneficial, and two, it's reliable. And if you can't be cost effective and you can't be a reliable supplier, you won't be part of a value chain. And infrastructure is key to those two core elements of why larger companies reach down into the small and medium-sized enterprises to be suppliers, distributors, and things like that.
Thank you very much. And you left at a perfect point to move on to, because when you mentioned the infrastructure, we can mention about the psychological, social, and also hardware infrastructure as well. And now, if we continue with Mr. Justin Monday, I would like to ask again 2 combined questions together so that he can wrap it up in a better way. But how can infrastructure finance recognize the importance of sectors such as energy, food, water security? Because this is one of the some of the areas that you've been working on very carefully. And in relation to that, what will be the impact of infrastructure development on the blue economy, which is a fascinating term and concept according to my own personal taste at least. Maybe you can also want to explain in a couple sentences, I don't know, but if you have that background, if you have that infrastructure for local chains and all that, then you have a much better inclusive system. This is what I've found, but am I right? What would you say about that?
You are kind. Didn't know this is working? Yeah. It works. Amazing. Look at that. Thank you very much indeed. It's a great privilege to be on this panel. Slightly daunting, particularly if I may say, speaking after Mustafa Bey's excellent first presentation, which more or less covered everything we needed to say. It was so inclusive. I wondered, just before I answer those 2 questions, if I can just paint very quickly an overarching picture. Mustafa mentioned that there was a very successful Finance for Development meeting in Addis in July. Well, there was and there wasn't. It's 60 pages long. It's about 150 paragraphs. It covers everything you could ever possibly to imagine. It's fantastically inclusive. It's good. What it doesn't have at all, anywhere, is any money. And there is a meeting, as we all know, at the end of this month in New York, where people are hoping that the money is going to become apparent. We also have, as everybody knows, a COP21 in Paris in the beginning of December, where again we are starting to move towards a more constructive outcome than we might have anticipated. But again, the missing ingredient is money. And there's an interesting dynamic between this issue of cash and the policy, whereby if you sit with colleagues in the public sector, they will say budgets are constrained, it's a very difficult circumstance, and don't worry because the private sector will supply. If you talk to colleagues in the private sector, this is usually news to them. Because why should they? Private sector does a lot of things very well. What it does particularly well is to understand the opportunity cost of capital. And it will not place capital in places where the opportunity cost is too high, as the Treasurer from Australia was saying earlier this morning. And therefore we have quite a serious dichotomy between what people recognize needs to happen and the vehicle by which it might arrive. And at the moment, there doesn't appear actually to be much progress in identifying in real terms where this money is going to come from. On the other side of the question, or the table, you have then the discussion about the $90 trillion of infrastructure development in the next 20 years. This is an entirely different set of negotiations and discussions. It is considered that it is likely to be there because this money is more or less there anyway, and you need to double it, but you've still got a huge amount of money on the table. The relationship between that infrastructure investment and climate change and energy, food and water security is never really terribly clearly spelt out. And when it is discussed, it's discussed in the basis of energy, one silo, food, another silo, and then water, another silo, without the clear understanding that actually all these 3 things are not only linked, they are systemically joined. And therefore, if you don't get the finance focused specifically on those linkages, the act of financing is likely to increase exclusion rather than increase inclusion. And there are so many examples of this around the world. And the other, if I may, this broader set of linkages, which is perhaps important to identify, is that we have these discussions now about global growth, which is good. Things are starting to get better. We're talking about the massive investment into infrastructure, which is good. There's an understanding of the investment required to feed the 7, 8, 9 billion people in the next 20, 30 years for agriculture. But then there's another discussion about development assistance, and then there's another discussion about humanitarian aid.
And there's no clear link between those three silos either. And at the moment, we have, as is only too evident at this tragic week, an arc of instability which starts slightly further east from where we're sitting now and goes down to Yemen, cuts down to Chad and Niger, and then cuts across to southern Sudan, and is starting to trickle further south. In all the discussions which are going on the finance and development and negotiations, there's not much effort being paid as to how the people who are already excluded and living on the margins of these societies can be included. We desperately need to find a way of ensuring that development finance becomes a determinant for stability, not an accelerator for instability and exclusion, which is why I think this discussion around inclusion and the B20 and G20 is not only important, it's probably critical. And it's critical because we don't have a huge amount of time to get this right, because the underlying drivers that are affecting our economic growth are getting more insistent, more clearly defined. A lack of water, food prices which are increasingly volatile, and energy which, unless we move towards a very intelligent and off-grid system, is not going to reach the part of the many billions of people who are going to need it. So infrastructure finance at a first base needs to understand its relationship to the broader environmental drivers which can sustain it: water, energy, and food. If you look at what's going on in China and India, massive, massive developments in infrastructure. The strategic understanding of how these places are going to survive in 10 years or 15 years is sometimes a very optimistic scenario. And then when you start to understand and forensically analyze where this water is going to come from, given all the other demands on it from industry, other cities, agriculture, it's not there. And therefore there's a striking need, a really strong need, for infrastructure not to be considered as an isolated totemic silo in itself. It has to be posited within a broader framework. And you asked kindly about the blue economy. It's interesting, isn't it, that this idea of a blue economy, which probably is shorthand for the idea of protecting some of the world's fisheries, then the marine fisheries and aquaculture, but then also the coastal cities as well. Blue economy is probably, it's blue because it's marine, but also the impact of the terrestrial economy on the blue economy is profound. By 2025, for every 3 tons of fish in the sea, there will be 1 ton of plastic. So which is not great. By 2020, it is anticipated that every single seabird will be carrying 8% of its body weight will be plastic. That's just plastic. That's before you get into waste. That's before you get into all the toxicity around some of these cities. So there's a need to understand that when you talk about the blue economy and infrastructure, 60% of 65% of the world's cities of over 2.5 million are on coastal zones too. The impact of developing the infrastructure on the marine economy will be profound, unless we're very lucky, potentially catastrophic.
And thank you very much for a beautiful wrap-up. And so we understand that from time to time we have a mishap or misunderstanding of the concepts. Like we have been pushing out a lot for green economy, believing that we are being environmentalists with the business and all that. So we have been trying to create an infrastructure for this structure. But when we invented the term blue economy, we also noted down that some of the green movements are in fact harming the economy or harming the nature itself. And with a perfect understanding of business world and government's approach, we should be very careful about to move forward in that regard. This is also later on, maybe in the second round, most likely I would like to get into that. But as for Millennium Development Goals, we will be needing very interesting government and business models that we can combine, and maybe we can relate to that. But before that, I would like to continue and give the floor to, thank you very much again, to Mr. Gary Littman. And as U.S. Chamber, you have been representing not only the American business community, but the largest business community in the world, we could say, I guess, depending on PPP approach or not. But what do you think about the role and responsibility about the business world for inclusive business. And does this kind of responsibility really lies on the business world and solely on the business world?
Does this work? It works. It's very interesting to participate in this conversation at the end of a long conference. I've been trying to put together a few considerations to complement what Rick has described, and that's a perfect example of how our members deal with some of the challenges of development and inclusivity. But every time, I buy a pair of shoes, I include somebody on the other side of the world in the global economy. Every time I download a new app, I'm including somebody along that value chain, somebody who wrote it, uploaded it, created equipment, invested, checked, proofed against hackers, and allowed me to take advantage of somebody else's product. Trade is an amazing vehicle to include everybody in the growth story. And I wanted to underscore that. You can include people, you can include companies in growth, or you can include them in your crisis. There are different kinds of inclusivity. But every company, I don't know of any company that wants to exclude their customers, their suppliers, their creditors from the growth story. So the question is really for us, how do you empower the new players to contribute to the global economy? How do you, it's always been happening. Trade's been happening. We are in Turkey right now. What did buyers 6 centuries ago knew about the needs of their suppliers? But trade was happening. And you didn't have to worry about inclusivity at that time, right? Because you based your production on the trust in people you were dealing with directly in the human networks, in the chambers of commerce. That was the original social media. In order to include others in your community in the growth narrative, initially locally, then regionally, then globally. So what's changed and why we're discussing these issues right now? I think the new change is complexity, and complexity of information that makes it very difficult for some entrepreneurs to actually offer what they have to offer to the global economy and overcome the informational barrier, the compliance barrier, the demands of scale. Is that the responsibility of larger companies to go around the world and look deliberately for the smallest or the least capable? Probably not, right? Without the larger companies, without the accumulation of capital, you wouldn't have the resources to do a lot of other things that are part of your social responsibility. But empowerment of companies to contribute to the global growth, that's a matter of policy. That's something I think we need to talk to governments about. We don't use the word inclusivity in Washington much. Every year, you can look on our website, we give an award for economic empowerment. And look up this year, the 3 front runners are a Dutch pharmaceutical company, a big global investment bank, and an international clothes designer. And you'll see, I cannot tell you who's going to win, so you'll see the programs that they do. But they all are able to do that only because they were able to have successful businesses, global businesses. And they were able to go to different countries and be profitable there. So the issue of inclusivity cannot be a mantra that becomes an obligation on companies and becomes another barrier. Who are we trying to include? We have to keep the system open, right? And provide information for those who are able to be part of it. And those who cannot, not everyone can be an entrepreneur. That's a matter of national government policy. That's a totally different story. What's new now, I mentioned, is probably complexity, and that's where the idea of having an SME global forum might be very helpful, because complexity hits both ways. For a large company that's always looking for ways to be more efficient and to reach more customers and to diversify its supply chain, it's more difficult to find information about who is able to do what around the world. The world is larger, you operate in many more places, there are new players all the time, new companies are born and die every day. In the US, I think it's 1 million companies that are born and disappear every year. So the larger companies have an information barrier in finding people who are capable to be included in the global value chains. There's room here for public policy. For the new entrepreneurs, the barrier of entry is also largely informational right now. Where should I go? Where should I apply my entrepreneurial skills? Yes, I know my neighborhood, but if I want to be part of the global value chains, what's the market signal? Should I go into, new types of agriculture? Should I go into digital economy? Where will the global demand go? So there is an informational gap on their side. Rick has mentioned that there's also an informational issue about the creditworthiness of entrepreneurs. And indeed, we all need to have probably much more sophisticated ways to provide potential creditors, investors, crowdfunders with information about SMEs. What's an SME? SME typically in the United States is a company started by a woman relying on a little bit of savings and the credit card, right? So what's the information about her capacity to be part of the global market? Very limited. But there could be models, there could be risk models that could become acceptable to regulators, and there could be new types of scoring agencies. Private sector can provide new ideas here to overcome, again, informational gaps. And I think the SME Forum could be a place where you could discuss how to make different blocks of information understandable to companies in different parts of business in different parts of the world. As far as governments are concerned, we want the governments to keep the rule of law. We want the governments not to be corrupt. We want the governments to maintain macroeconomic stability. Yes, from time to time, population demands, politics demands that a small business program is established. A crisis gets a response. You can do it. We've done it. I think in 1953, 54, we established SBA. And I printed out the list of abbreviations they're using today to describe what they do. It's impossible even to read it, okay? They taken particular pride in listing 16 federal agencies that are all part of providing SBA, small business support. If you just look at the list, you don't want to be in small business anymore, right? You're done. So yes, occasionally they do good and they mean well, but a lot of these public programs were designed before the digital revolution. A lot of them were designed before the current level of globalization. A lot of them were designed before the shock of the financial crisis. Redesigning them is very difficult. So my suggestion is look at the US model, don't do it. It creates opportunities for rent seeking, it creates special programs, it creates political boondoggles. It creates an industry of consultants around them how to tap into these programs. You got to be very, very careful. To sum up, with stable rule of law, with transparency, and a lot better information provision, both to small business and about small business, would be a good start.
Remarks. Thank you very much. Really interesting remarks and many points to share. I want to underline a couple of those. I mean, you don't expect much from the governments. You just expect them to be... All right, we'll be omitting it from recordings, I guess. No, I'm just kidding. And obviously, the US model has a lot of deficiencies, a lot of success stories as well. And we should always revisit the models and revisit and invent new things. As you mentioned, this is the second time it's coming up, digitalization, innovation. So we should innovate and digitalize and change the understanding and regulation structure as well. So there's a perception gap between or from the business, what's been expected from the businesses as well. I mean, is businesses are to save the world? Or it seems like I'm feeling like now it's businesses, everybody's expecting businesses to save the world's problems, not the governments. There might be a rightful demand about it, but obviously without sustainability, without profitability, a business cannot run itself. So there should be very real about it. And selecting the correct SMEs, for instance, or correct entrepreneurs that can contribute to the economy, and the asymmetry of information gaps, these are all important points, obviously. And maybe to sum up, creating a solid regulation, not thousands of pages of abbreviations, but with European sense, better regulation or even smart regulation is quite important to revisit the infrastructure or legal infrastructure for the future. Now, I would like to continue to Mr. Yilmaz Argiden. Thank you very much for your comments again. And again, a joint question. Today, I'm enjoying joint questions because it gives you also another opportunity to make the connections. But what do you think is the relation between good governance and inclusion?
that it is a business model. It has to be core to the business, and it integrates low-income people into the value chain. So that is not necessarily that pay on time. As a distribution company, the parent company knew that the payments, 30, 60, 90 days,
so rarely do you have a one-size-fits-all approach. So I think you have to obviously design it to fit the economic and the regulatory environment in which you're going to find your subjects. Now, I'd like to add a couple of things, if I can, on sort of what I was talking about earlier, but I think they're important. Insofar as financing, for example, and you mentioned agriculture, I had the opportunity about 20 years ago, I think it was IFC, paid for me to go to Uganda and to help them create a warehouse receipts system. And it was unbelievable to me, it was shocking to me how it made such a huge difference by just putting in their code, their laws, this ability for that farmer with 2 coffee bean plants to be able to take the product out of that and transfer it into cash so that he could buy the fertilizer, et cetera, for the next year. So there are well-established, as you pointed out, there are well-established methods by which to assist in this sustainable but inclusive approach to business development. And I think perhaps we're hitting on something here where we ought to look back at those best practices and do a little bit more research on what has worked in the past, maybe not invent a whole lot of new ideas in the future that are untested. The other thing I'd like to point out is something that I know Gary alluded to. Well, I think we all know this. We are living in a brand new environment vis-a-vis the digital economy. It is a game changer. It's changed everything. And yet we're also, and I'm concerned about this, what's happening, not so much just because of how it impacts Citi, a very digitally enabled company, but the future for the kind of inclusive financial services that you can offer through mobile apps, through the internet. And that is this concept, it's, I think, very ill-advised, of forcing localization of data processing and storage of data in country. We term this cross-border data flow, but a lot of governments, particularly in the emerging markets, are starting to think that if they force you to localize your data processing centers in their markets, they're going to increase employment, they're going to motivate transfer of know-how, and it's false. It's a false and archaic proposition. So I think that when we look at how to help develop an inclusive and sustainable business model, part of this really, a very important emphasis has to be placed on the role of the internet in today's global economy that empowers these small and medium-sized enterprises to quickly reach out to customers they never would have contacted, or to contact potential customers themselves in a global value chain. I mean, it is a fundamental part of development that needs very careful guardianship. And I'm very concerned about what could be happening if we don't pay more attention to that.
Thank you very much. Really important points. I would like to comment a lot on that, but I'll be cutting down from my time, and I'd like to continue to fill out. We started a bit late, so we can finish a bit late, I guess, and there's plenty of time before dinner. And since this conversation is still being videotaped, it can be very important. It can create much outcomes as well. And I would like to continue with Mr. Justin Mundy, since you have been doing fascinating work there with all the hardships and challenges as well. I'd like to look into the future with you a bit. What's the role of public-private sector partnerships, according to your taste or understanding, and in developing a credible response to infrastructure and development needs, for instance, per se, over the next 20 years? And maybe, if you like, you can also not only share it with your experience and your expectations of transformation, but again, if you want, you can also tie it to the Millennium Development Goals, which are, again, easy or hard to reach, I don't know, but your experience is quite unique in a way in this regard, so I would like to hear a lot from you from this point.
Is that working? Yes. Perhaps the last question first, if I may, in the sense that everything that we're talking about needs to be related to the Millennium Development Goals and the Sustainable Development Goals. That's no longer an option. In the same way that everything we do in some way is now related to climate change. It's all around us. So we have to find clear ways of ensuring that all those 17 objectives are clearly inculcated and articulated and monitored and measured and integrated into everything that we're talking about in terms of finance. If we don't, not only will they not be somehow met, but the consequences of not meeting them are going to be very difficult. So easily, that second question is easily answered. In terms of the first and the public-private sector partnerships, I think it's been discussed so often in the last couple of days, and as Rick mentioned as well earlier on, this issue of the enabling environment is absolutely key. Nobody is going to invest any money at all in an environment which is toxic, unless they have an extremely clever way of extracting the maximum rent in the shortest possible time. And that is paradoxical to most of the sustainable development ethics which we're trying to put forward. So the role of the public and the public and private sector, they have two different roles. The public sector role in this is usually to find a way to allay and reduce and mitigate the risk. But that always comes at a cost as well. And there are many examples of this being played out. Some are good, some are quite complicated. I mean, the World Bank Group has, and I used to do this in a previous life, a lot of partial risk guarantees, partial credit guarantees. They're very effective. My word, they take a long time. I mean, if you're waiting for 2.5 years for a partial risk guarantee to come out, or we go to MEGA and the same thing, the transaction costs associated with that are not 50 basis points. I mean, they're 200-300 basis points, which makes it impossible to do. So there has to be a way of trying to ensure that that risk management element is effective and quick, cheaper, but at the same time doesn't dilute the safeguard policies which governments and IFIs have, because those safeguard policies on the environmental and social issues are absolutely fundamental to the SDGs and MDGs. So we have to find a way of squaring that, and that's not easy to do. It's very complicated to do that. The second, of course, is that from the public sector as well, many of the private sector projects in some of the developing countries, small island developing states, are tiny and really minute. And how do you, for a major institution like Citibank, getting out of bed for $10 million is not going to happen. Getting out of bed for $200 million is starting to be slightly more interesting. Getting out of bed for something which is close to $1 billion is something which will happen. And many of the green bond structures which we're all talking about, and which we've played some part in starting, the institutional investors are really only interested at something north of $500 million. So there's a huge need to aggregate some of these tiny projects, but to do so in a way which acknowledges the risk parameters within which they're operating. So then you have to look at, if you're looking at inclusion and how do you bring the poor on board in a way which we need to expand supply chains and everything else, well, then you have a look at the role of microfinance and microinsurance. But there you have the same problem. You have to find a way of aggregating the capacity to reach people in a way that makes it possible for the large sums of money required to meet the demand we have to get on the table. And therefore, there's a need for some intermediary clutch mechanism, gearing mechanism within these conversations to enable the large set of capital which can be deployed if only a way could be found to getting to the people who need it. And that requires a public-private sector partnership, both in terms of how long you hold on to risk, who holds the risk, when bits of risk have got rid of, and what is the efficacy of doing that, and where the money is going to be made in that process. And what I think we have to be quite careful about is assuming that small projects which have been successful are somehow automatically scalable into large projects. That's not the case. There are many small projects which meet exactly the requirements which, and your point in terms of if you have a very, very small project, that's probably exactly what it needs to be to meet the requirements of where it is. It is not automatically scalable. And there's a lot of quite, I don't know, not perhaps very sensitive talk about how it's possible to grow these projects into something at a scale to meet the demands of institutional investors who like public-private sector partnerships. A lot of there's this discussion about blue bonds going now. Blue bonds on fisheries are dependent upon some of the most vulnerable, excluded, and marginal people on the planet. They are not capable of bearing the weight of meeting the economic and financial demands of the agencies who are behind them. So again, we need a gearing mechanism between those vulnerable communities. It could be agriculture, it could be forestry, it could be people in favelas, and the way of the institutional investors. So, in short, to answer your question, the role of public sector, public-private partnerships is absolutely critical. The role of the IFIs in that has yet to be really, I think, developed in the way it needs to be. The way of the insurance companies has not yet been developed in the way it needs to be. We're only just starting this conversation. We haven't finished it by any stretch of imagination. But again, being slightly pessimistic, I'm not sure we've got a huge amount of time to get it right. I'm not sure we have a huge amount of time to get this right. The drivers are growing, the population is growing, the economic exigency of many people is getting worse rather than better. The gap between wealth and poor is getting larger. So we have to move quickly, I would suggest.
And we should feel the urgency as you were finishing, exactly. We are always acting like we have all the time in the world. We can act slow and we can decide later, but we have to move fast always, as it is the case now again. Thank you very much for all the comments. And I'll be continuing with Mr. Gary Littman again. And as for American business community, can you quote us some examples regarding inclusive business opportunities or projects that you may want to share with us, and how it could be improved, how this structure could be improved with leading businesses or by the help of the leading businesses? And also, you should think that the civil society organizations, NGOs, and these kind of organizations can take real part in these efforts. Or should they, could they, and how could they?
Look, there are many examples. Every day, companies, enter the market, and particularly right now, you look at the, shared economy. Literally, a few blocks from our building, that's where Living Social was started, and that's a business based on inclusivity. It's allowing people to use their own spare resources that they can offer to their neighbors, and then their neighbors to their neighbors, and then there's a whole economy around that. I think that the value that an organization like ours brings to that, it allows aggregation of experiences, and it allows some synthesis that then is offered through the media and directly through advocacy to policymakers, both in the United States and overseas. And every time we're able to communicate that it's important to think globally and look for opportunities everywhere, I think we're helping development, we're helping to include and empower others. Every time a container of products goes through the Bosphorus, it's a container of inclusivity. Somebody is playing that game. We've been also very influential, maybe not enough, but we've tried, in persuading policymakers that exclusion of countries, whole business communities from international business is not a good policy, even when you disagree with the politics of a particular country. And America has a particularly bad record excluding others. So we have to be very watchful and mindful of all the complexities, but I don't want to use specific examples because none of them is truly replicable. And the American experience is very unique. I do want to agree with what Justin said, that the pressure of time is not entering our own policy making and conversation with business enough. For example, as we speak, President Obama is in the Arctic, right? We in the business community wanted to include small businesses in the Arctic in some supply chains, not necessarily, to explore oil and gas. There's enough of that, and the price is low. But it's a vast area that has been left actually insulated because people believe that that population should be satisfied with their level of consumption. Nobody asked them. Some are, some aren't, but they have no access to health care, they have no access to education, they have no access to transportation, and people go there and just admire how isolated they are. Not a good idea, but you have to do it understanding the concerns of environmental pressure that you put there in talking to the local people and looking at global experiences. I'm getting back to my mantra. Our organization is ultimately the American political party of business. We represent the mission of business, and it is including everybody as much as possible and allowing everyone to contribute their value to the global good. Doing it in a smart way, doing it in an environmentally responsible way, using the tools that are available right now to do it faster, and take care of those who cannot. And that's the game.
Really important points. And at the end of this panel again, I feel like I should get out and try to nudge people around, both from business side and the government side. Okay, we're in a hurry. We should be very careful about inclusive growth, and we should be doing it already. Anyway, thank you very much for your comments. And as for our last panelist, last comments, but not the least certainly, I would like to ask Mr. Arguden, we know that you've been working quite hard with UN Global Compact. You even addressed the UN itself at a really interesting video. You have been sharing strong messages as well. So could you please share us with your experience and initiatives, contributions? What's UN Global Compact and how it can contribute to inclusive growth at this hour? Thank you.
As you know, UN Global Compact's main mission is to have sustainable and inclusive societies through principled business behavior. And it's a voluntary initiative. However, I always believe that incentives are the right things to motivate people. So the Global Compact, people signed up initially for Global Compact as a nice thing to do, just like the CSR and so forth. But soon they realized that it was a great risk management tool. Because in any of the areas, whether it's the labor, human rights, environment, corruption, and so forth, if you had a problem, it had a significant value deteriorating effect on your company. Right now, I think some even more visionary companies are seeing it as a value creation opportunity, in that if these are the problems of the world, solving problems creates value. And that's the new stage that the Global Compact is moving towards. And particularly with the SDGs that will be adapted at the end of this particular month. I think that it's been agreed already. It will be just formalized. One of them is about good governance, which means building effective, SDG 16 is building effective, accountable, and inclusive institutions at all levels. It involves the civil society, business, and the governments to have better governance in a way by including people. In the Turkish network, we have been able to come up with a new and innovative approach, which try to increase both the spread of the UN Global Compact principles as well as better implementation of those principles by providing the incentives, especially for SMEs and to be able to get more inclusive into the Anatolia and so forth. What do these SMEs need? They need markets, they need finance, and they need more information. Knowledge. And we thought that it would be very good to leverage the natural incentives that are in the business world. For example, if we can incorporate these principled business behavior into the purchasing contracts of major brands, then not only will those larger companies be able to protect their brands better, but also have a significant impact on their supply chain in terms of them being affecting proper business behavior, but also will differentiate those SMEs who pay attention to these things and create new markets for them. So it's a win-win-win all around. Similarly, we are trying to help banks incorporate into their credit evaluation processes these global compact principles. Because it is, once again, a win-win-win type of a situation, because those companies who behave properly and principled business behavior have less risk, so the banks have a higher probability of getting back their payments. And those companies who do this business properly, if they can get access in a more preferential way because of the better values that they can get through this process, evaluation process, it will motivate more companies to be incorporated into this better world in a way. So leveraging natural incentives and allies, which are banks and major brand owners, to broaden our outreach with regards to this voluntary initiative has been a quite successful and effective methodology. And I'd like to take this opportunity to share that new strategy that we have started to implement. Thank you.
Thank you very much. As one of the knowledge partners of the B20 process, you have been also focusing on an important aspect as well. It's just like giving money to SMEs to give them the correct knowledge as well, because knowledge is also quite important, and we should also never omit that part. And as we are finishing, I just wanted to remind that the B20 recommendations to the G20 countries also include a specific topic about inclusiveness, and they have 5 specific items, which includes mostly SMEs, but also female labor participation and youth employment and less rigid market dynamics as well. And hopefully we can achieve altogether a much better world for the sake of humanity. But I would like to first of all thank you very much for sharing all these important knowledge with us, as you have been very distinguished panelists. And I would also like to thank you very much, not only our introductory speakers from the Ministry of Foreign Affairs and UNDP, but also maybe the most to our esteemed guests who has been sticking up with us until this late hour after the 2 long days. Thank you very much again, and hope to see you again soon at better conditions as well. Thank you.